We're looking at the platinum premium versus gold fund hedge perspectives, and we're doing that with Chris Pretorius. He is a wealth manager at AlphaWealth. Chris, thank you for making the time to join us. Maybe let's start off with just getting an understanding of whether there is hedge fund activity in the platinum market.
Well, thank you for having me. I think the hedge fund activity in the platinum market is at the moment not great. I think the biggest problem for hedge fund is, you try and analyze a market, you look at supply and demand, look at the fundamentals of the industry, and the platinum market has got so many labor disruptions. And I think one of the main problems for platinum is, over the years, is the main drivers obviously being industrial, catalytic converters. And if you look at the car sales over the last 4 years, since 2010, car sales have increased, yet, platinum prices haven't really kept up. And if you look at South Africa being 80% of the world's platinum market, last year we had strikes for 5 months. And yet the platinum price has been incredibly weak. So I think from a supply-demand perspective, and I think it's a very hard space to play. I think liquidity, especially in the physical market, I think the biggest ETF that I'm aware of is roughly about 15 billion rand. It's actually a South African ETF. So liquidity is not great, and I think most people generally play it via the stocks. But I think hedge funds generally have shied away from the space just because the supply-demand is so volatile. There's the disruptions from the labor unions or labor part of it just makes it, call it an unanalyzable market. You might make the perfect call from a supply-demand perspective, but then they might go on strike. After the strikes last year, I think Northern was on strike again last week, and I don't think a lot of people are aware of it. It was very, very quiet, but these are things that you would have thought is now out of the system.
Chris, it's Lindsay in Cape Town. What you've just said about the lack of liquidity, certainly in the platinum market, because I remember in the old days the New York Mercantile Exchange contract size for platinum was 50 ounces and gold was 100 ounces, and there was so much more volatility, or rather volume, in gold than platinum. But it's almost as though that if a hedge fund got hold of it, they could have a real go at the platinum market because of what's happening in South Africa and the fact that there's so much uncertainty in the world, and they could drive gold to a massive premium to platinum. And that's one of the reasons that I really wanted to talk about this tonight. Is there hedge fund activity between the ETFs, between the physical, between the gold and platinum price in rands and in dollars and other currencies, or do they concentrate more on things like the euro dollar and other currencies?
Yeah, I think firstly in my opinion, there should be no correlation between gold and platinum. One is incredibly, call it industrial use orientated, being platinum. There's a jewelry aspect from it, but it's by far the minority part of it. Whereas gold is, as Wayne alluded to earlier, I almost want to call it a chaos investment. It's you're banking on things going wrong. There's completely different dynamics at work between the two. And I think for that reason, hedge funds can't make the link. If you look since 2000, the correlation between gold and platinum is very limited. I think it's something like 50%. So for a hedge fund to get involved in that, it doesn't make a lot of sense, in my opinion, because it's very hard to connect the dots between the two and which direction they're going to go.
Chris, as you spoke about earlier on, the platinum price, when you consider what happened to supply this year, last year at least, you would have expected a surge in the price. I mean, I know Europe's gone into recession, but generally the world economically is a better place now than it was 2 years ago, and the demand should be better. As you said, car sales are up, etc., etc. Has someone been stockpiling this? Have the catalytic converter producers been stockpiling? Because you would have expected when 80% supplier has a strike for 5 months that the price wouldn't go down, it would go up, and yet we know what it's done.
Absolutely. So I think two aspects at work. I think the mines foreran the strikes, and they probably stockpiled quite a bit, so they were able to continue supply into the market. But I think another very big factor here is the recycling of the platinum. The car producers, platinum you can recycle it. So you scrap your car tomorrow, that converter gets recycled and it gets reused. And I think globally, if you look at the big car manufacturers, they're cognizant of the problems in South Africa from a labor point of view, so they've just become a lot more focused on the recycling aspect. And I think largely because of what you're mentioning, it's gone the other way. Last year the price should have gone to 2,000 by all logic, and I think for that hedge fund managers will generally go, okay, I don't understand the dynamics between supply and demand here because they're not quite making sense.
And of course, just as we wrap up this interview, just to get a sense from you on the outlook for platinum, on the back of the strikes that you mentioned earlier. I mean, there's a lot of talk that in the gold sector, we're likely to see many strikes coming up this year, with the wage negotiation process being up for review. Taking that into consideration, and the fact that in the next 2 to 3 years, platinum will go through that cycle again, what is your sense about the outlook for platinum in South Africa compared to the outlook for gold?
Well, gold has got no real demand basis behind it. I think a third of gold is investment driven. Reserve banks buying it, As I said, the largest ETF I'm aware of on platinum is like 15 billion. My first ETF I found this morning on Vanguard is 30 billion on gold. It's much more of a store of value. So gold is not so simple, because you don't actually know what's driving it. If the Reserve Bank keep on making crazy decisions like Switzerland, and who knows what the US Fed is going to do later this year, that could drive gold demand much higher. Platinum from a long-term point of view,
yeah,
I think platinum is probably be in trouble. Technology is going to change cars, electric cars, new technologies, and the market is probably going to find a different way of finding catalytic converters. So I think long-term platinum, I don't think it's got a great future. But I think in the short term, anything can happen. And we spoke about it earlier, the supply the stockpiling that the mines did last year. We've got no idea what they actually have left.
right.
So any disruption could actually now produce a spike. It could not. It's a very difficult market to call.
It's a difficult market to call. We'll leave it on that note. A very big thank you to you, Chris Pretorius. He is, of course, a wealth manager at Alpha.